Very good morning, all. Still, some students are joining. Shall we wait for 1 minute?
Yes, sir.
Okay. Can you see screen, please?
Yes, sir.
Excuse me, sir. Most of the students are joined now.
Yes. We'll wait for another 1 minute. Okay. Students are joined now. Most of the students. Shall we start then?
Yes, sir.
Okay. No issue. So we started yesterday from the basic assumptions. That number one, variable cost varies in direct proportion with the level of activity. However, per unit variable cost remains constant at all level of activities. And I proved this statement with the help of a statement that when you calculate at a total, that variable cost remains same, but if you calculate per unit, there are some changes. Then second assumption, per unit selling price remain constant at all level of activities. So selling price doesn't change whether you have lower production, average production, or highest production. At every situation, selling price per unit remains same. So there is no change. Now whatever is produced by the company is sold off. Now with this assumption, in your theory, there are also marginal costing limitation. So same assumption we can criticize. Now, for example, if you observe this second, per unit selling price remain constant at all level of activities. Now, you are also mature enough. You also visit a market. You go to purchase for several things like from electronic product and so on. Now in a market, do you have any experience that the selling price remains same for suppose if you have purchased a laptop and the same company's laptop, if you are purchasing after 6 months, what is your experience? The price is remain same or there are changes in prices?
Changes in prices.
Yeah, there are changes in prices. So I think this is the limitation of marginal costing. Though they have mentioned in a book, this is the assumption that per unit selling price remain constant at all level of activities. But in practical, it is not true so far, because whenever you search any product in a market after 6 months, even after 1 month, you will see there are changes in selling price, because company, they have different strategies to sell their product. So they always monitor on their selling prices. They also get data from outside market, that competitors, how they are selling their product, then customer, what they are liking. And on the basis of this, there is a continuous volatility on the selling price. So we cannot say that it is a remain constant. So there are always up and down. Sometimes prices increases, sometimes prices decreases. Then last assumption, whatever is produced by the company is sold off. Again, if you apply this assumption in a practical sense, even this is not possible. Whatever you produce cannot be sold completely. Something will be left back. Something will be left. Are you agree with this? Can you give me guarantee that whatever you produce, your company produces, completely there will be sale of your product or service? Can you give me guarantee? Yes,
No,
please.
sir.
No. So it is not possible. So this is also one of the limitation of marginal costing. We cannot guarantee that the complete production will be sold off. But since these are the assumptions, this assumption will help you in solving numerical, because there is a numerical part. In numerical part, we have to keep in our mind these assumptions that variable cost at per unit it remains constant. Remember, variable cost per unit it remains constant. Selling price per unit also remain constant, and whatever company produces, it is completely sold off. So there is no closing stock. So while solving numerical, we have to remember this assumption. Now, again, this table, yesterday I discussed with you in for calculation of contribution. And contribution, which type of contribution you expect? Positive or negative? Yes.
Positive.
Positive. There has to be positive contribution, because if there is a positive value, that positive value will help you to pay fixed cost of a company. If there is a negative contribution, then it is not possible to pay fixed cost. So there has to be positive contribution, and then we arrive at profit. So from sales we have to minus variable cost. Now, can I ask you what comes under variable cost? What is variable cost? We have studied in preparation of cost sheet. All direct material, direct labor, and direct expenses, it comes into variable cost. Addition of direct material, direct labor, and direct expenses. That is nothing but your variable cost. So from sales, if we deduct variable cost, we arrived at contribution. And this contribution help us to pay fixed cost of company. Because after paying variable cost, there is a fixed cost. So fixed cost will be paid out of contribution. And if your contribution is sufficient enough, from that contribution, surely we can pay fixed cost. And if you can manage to pay your fixed cost, then our company will have amount of profit. And every company like to have more and more amount of profit. So there, I don't think that you need any explanation that company wants profit. That is the sole and prime objective of any company. Are you getting this? Company's primary and important objective is to earn profit. Are you agree with this or not?
Yes, sir.
Yes, sir.
Yes. So the profit is the motto. And from this explanation, yesterday while closing yesterday's session, I told you the contribution can be calculated that sales minus variable cost equals to contribution, or profit plus fixed cost equals to contribution. So both way we can calculate contribution. म्हणजे तुम्हाला न्यूमेरिकल मध्ये जो काही डेटा मिळेल, that data you have to utilize for calculation of contribution. जर तुम्हाला variable cost आणि sales जर दिला असेल, तर from sales you have to minus variable cost, you get contribution. जर का न्यूमेरिकल मध्ये तुम्हाला फिक्स कॉस्ट आणि प्रॉफिट दिला असेल, तर मग कॉन्ट्रीब्युशन कसं काढणार? How will you calculate contribution if you are given information of fixed cost and profit? Yes.
Profit plus fixed cost.
Yes, profit plus fixed cost, and then you can calculate contribution. So either or that way, we can calculate contribution. After this discussion, we are going to solve a numerical. That time, you can apply this information. Now, yesterday we discussed this statement. So again, I don't think that there is any further explanation is required. And contribution equation part also we discussed yesterday and just now also. So higher and a higher amount of contribution is expected. It is desirable. Higher and a higher amount of contribution is desirable. Because why we expect higher and a higher amount of contribution? Anyone? Why higher contribution is desirable?
So as to pay the fixed cost.
Yes, so as to pay fixed cost of a company. So the more contribution, it is good for company to pay fixed cost. And after paying fixed cost, if something left, it is nothing but a profit of company. That is why we expect a higher amount of contribution. Now, contribution, it plays important role where there are more than one product. So remember this statement. Most of the companies, they do not have a single product. They have multiple products. But right now, we will focus on a single product. And then maybe after solving one or two numericals, then we will jump to the multiple product. But generally, company, they do have multiple product. You take any example, even Philips or Videocon company. These are the companies who are having a dominant role in electronic field. So if you take the example of Videocon, so Videocon is having several products, right from music system till washing machine, color TV, AC, and so on. Even Philips also, right from electric to electronic. So they are having multiple range of product. So for these companies, contribution plays important role, because Why it is playing important role? Suppose from one product of a Philips, say let's take say color TV. If color TV, if not generating contribution, but maybe electrical product of Philips company might be generating contribution. So this extra contribution which is generated by electrical equipment will compensate the less contribution which is generated by color TV of Philips, because there is no as such sizable demand for Philips color TV. Philips is known for generally electric product. So there is good demand for electric product of Philips company. So this way, one product compensate with another product. Now, let me show you the next slide. PV ratio. PV stand for profit volume ratio. Now this profit volume ratio, again, this can be calculated in two ways. That is, PV ratio equals to contribution divided by sales multiplied by 100. Can you see my PPT?
Yes, sir.
Profit volume ratio equals to contribution divided by sales into 100. We are multiplying by 100 because PV ratio is always expressed in terms of percentage. So that is why we multiply by 100. PV ratio should be expressed in terms of percentage only. Another way, change in profit divided by change in sales multiplied by 100. That way also we can indicate profit volume ratio. Now we know how contribution is to be calculated. Just now we discussed. Because again in PV ratio, we need a value of contribution. And we also require the value of sale. So in numerical, you are given this kind of value. You have to simply pick up this value and fix into this formula so that you can calculate PV ratio. But sometime in a numerical, you might be given 2 periods profit. Suppose first quarter profit and second quarter profit. So these are the two different periods. Now, when you are given 2 periods of profit, so find out the difference between these 2 periods of profit. So that is nothing but the change in profit. Similarly, you might be given 2 periods of sale. That is quarter 1 sale and quarter 2 sale. So the difference between quarter 1 sale and quarter 2 sale. So that is nothing but the change in sale. Are you following my explanation?
Yes, sir.
So change in profit
Yes,
divided by change in sales multiplied by 100. So that way also we can calculate profit volume ratio. And the third feature, it is after discussion of this formula, there are two formulas. It remains constant at all the levels. So the profit volume ratio remains constant at all levels. Whether all levels means, say for example, if I show you this table, look at this statement. Now here, the level of activities are different. Am I correct? What are the level of activity? 1000 units, 1500 and 2000. Are they same or different? Level of activity? Different, but in regards to the PV ratio, it remains constant. So let us verify this. We know the formula of PV ratio. What is the first formula of PV ratio? Contribution
Divided by sales.
into 100. Now, from this table, let us calculate. Can we calculate contribution? Can we get contribution from this table? We can get. See, we know the sales. We know the amount of sale. From this sale, we have to minus variable cost. So from sale, 1,60,000 goes. How much it is left? 40,000. Sales minus variable cost is equals to contribution. 1 lakh minus 60,000, equals to 40,000. Now everyone, please use your cell phone. So 40,000 is contribution. 40,000 divided by sales. How much is the sale? What is the sale value? How much is the sale?
1 lakh.
1 lakh. So 40,000 divided by 1 lakh multiplied by 100. Do it.
40%.
40%. Now, come to this next level. If company produces 1,500 unit, okay, then sale amount will be 1,50,000 and variable cost is 90,000. So what is the contribution in case of 1,500 level? Contribution is
60,000.
60,000. So apply this formula, PV ratio. Contribution divided by sales, 60,000 divided by 1,50,000. How much it is? How much it is? Contribution is 60,000 divided by sales, that is 1,50,000. 60,000 divided by 1,50,000 multiplied by 100.
60%.
40%.
40.
How much? 40%. And when company produces 1,000 unit, how much PV ratio? What was
40.
the PV? 40. And when company produces 1,500, PV ratio is
Again 40.
again 40. Now let us try. If company produce 2,000 units, then company will have sale amount of 2 lakhs and variable cost is 1,20,000. So from sale 1,20,000 goes. Remaining is 80,000. 80,000 is what? 80,000 is what? What is 80,000? Yes. Are you following me?
25.
What is this 80,000? What is the name of this 80,000?
Contribution.
Contribution. So contribution is 80,000. Contribution divided by sale. So 80,000 divided by what is the sale of third level? Sale amount is
2 lakh rupees.
2 lakhs. So apply this in your formula. Apply. How much it is? PV ratio.
40.
So is there any change in PV ratio? Is there any change or it remains same?
Same.
Same. So that is why it is mentioned here. Look at third line. It remains constant at all the levels. समझ गए? Did you understand?
Yes, sir.
So PV ratio remains constant at all level, whether you produce 1,000 unit or 1,500 unit or 2,000 unit. Sale value will change. Naturally, sale value will change. But PV, profit value ratio, remains same. So it remains unaffected by any variation in fixed cost throughout. Overall profit may change due to variation, but profit amount may change. Now, what are the indications of this PV ratio? Please try to understand the indication. PV ratio indications are: high PV ratio indicates that a slight increase in sale. If there is a high PV ratio, then you assume that there is a slight increase in sale. Vice versa, if there is a low PV ratio, that indicates low profitability. So here, what is your expectation then? High PV or low PV?
High PV ratio.
High PV ratio, because low PV ratio indicates low profitability. Always remember. So maybe in multiple choice question, MCQ, question can be framed. And if you understood these two lines, then surely you can identify the correct option. Okay. So low profit value ratio indicates low profitability. That is why we expect high PV ratio. And what about contribution? what we expect in contribution, high or low? You expect high contribution or low contribution?
High contribution.
Or high contribution. And what about profit volume ratio? You expect high or low?
High.
High profit volume ratio we expect. Now, after understanding the calculation of PV ratio, again, I repeat, contribution divided by sales multiplied by 100, or change in profit divided by change in sales multiplied by 100, still we can calculate PV ratio. It depends upon the information availability. Whatever information is available, that information you have to use for calculation of PV ratio. And there will be sums in examination, calculate PV ratio or calculate contribution for 2 or 3 marks. Any doubt for this particular PPT, profit volume ratio? Any doubt? Shall I go to the next PPT?
Yes, sir.
Okay. Now, the next one is break-even point, BEP. Break-even point. Now, what is your break-even point? Break-even point, it is the situation where there is no profit or no loss. So, it is just matching with the contribution. The other way we can say, the amount is just matching with the contribution. And when your amount matches with contribution, it means neither company has profit nor company has loss. It is matching, and that point is known as break-even point. Now, you might be thinking, why do we calculate the break-even point? Let me share with you, friend. Every company would like to know their break-even point, so that once the break-even point they achieve, the latter part is what? What is your logic? Once you achieve our break-even point, the latter part is what? If you target more and more, then where you will be landing? Any guess? Any guess? Not able to guess? Not able to guess? Now, let me show you the line. Suppose now this is my line. Now here I have drawn. This is my BEP. Now, up to this level, if you come to here, it is exactly matching. So no profit, no loss. This particular is no profit, no loss. This line, it is no profit, no loss. Now, if you go to this slide, if you go to this side, so this will be profit or loss area. What do you guess? What is your guess? Can you see my PPT? Hello? Can you see?
Yes, sir.
Now, if you land into this area, this will be, now this is your BEP point. BEP point. Profit, naturally profit. This will be your profit area. This is your profit area. And vice versa. If you go to this area, then this will be what? Opposite to this. Opposite to this. This will be your loss area. This is your loss area. So here there will be loss, and here there will be profit. So here my point was to share with you that BEP, it is the line. We can say it is Lakshman Resha. Lakshman Resha. We are seen in Ramayana. So this is Lakshman Resha for Rekha for company. That up to that level, company, it is the indication for all managers, so that they will prove their performance beyond that level, so that individual as well as company will enjoy the amount of profit. So that is why companies are interested to know their break-even point. Every company. Let me share you another example. When Reliance Industry started their business, and they announced their IPO in the market, initial public offer share. When they announced in the market, that time Reliance company announced that right from today onwards, next 7 years, our company will not have amount of profit, because the 7 year is our BEP, and then after 7 year, company will enjoy the amount of profit. So the day one, they inform BEP to their shareholders. Now, what message shareholders will take from this announcement? Anyone? What message they will receive from this announcement of company? What is the message to investor? Did you follow my example? Hello?
Yes, sir.
So what is the message to the investor through this announcement? Anyone? What is the message? Why did they announce BEP?
Hello, sir.
Yes.
Hello. Now
Hello?
they will be in a new. Hello.
Hello?
Am I audible?
Yes, sir, you're audible. You're audible. Yes.
Huh. Yes, sir. Now they will be in a neutral stage after after some years, after 7 years,
Yes.
they will get a profit in such case.
Yes, correct, Mansi. You are very correct. Now, the message to the investor is that next 7 years we will be in a neutral position. Means there will be no profit, no loss. So do not expect dividend from us. That is the clear message to the investor. And then after hello, 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 hello. Yes, am I audible? Am I audible?
Yes, sir. Yes, sir.
Yes, sir.
Yes, today is Thursday, no? Today. So power off. So that is why there was an interruption. But anyway, I am using now my mobile data. Just give me 1 minute. Hello. Hello.
Yes, sir.
Yes, am I audible?
Yes, sir. Audible.
Okay. I may not be able to share a screen right now with you because there is no power. But let me explain. Maybe tomorrow I can share with you the PPT, but we can cover the theory part. Is it okay?
Yes, sir.
Yes, sir.
Okay. Can you give me the hint? Which point we were discussing?
Break-even point.
Yes, a break-even point. So I was trying to tell you that this is a situation of no profit, no loss. It means that at this stage, contribution is just enough to cover the fixed cost. And the other way, that is contribution equals to fixed cost. That situation is known as break-even point. Contribution equals to fixed cost. Because you know that contribution minus fixed cost, what we get? Contribution minus fixed cost, what we get?
Profit.
Profit. So here your contribution is just enough to pay your fixed cost. Suppose if contribution is 50 and fixed cost is also 50, so 50 equals to 50, that way. समझ लगा? समझ ला ना?
Yes, sir.
So it also means that contribution generated by all sales beyond a break-even point will directly result into what? I repeat my statement. It also means that contribution generated by all sales beyond break-even point will directly result into profit or loss.
Is it profit?
Yes, it is profit. Correct. I repeat again. It also means that contribution generated by all sales beyond break-even point will directly result into profit. As such, it will be the intention of every business to reach the break-even point as early as possible. As I give you the example of Reliance company. Reliance company declare when they went for a public issue of their company, that time they declare that our company is having 7 years of BEP. But here, as such, it will be the intention of every business to reach the break-even point as early as possible. So the company will have intention to reach that BEP as early as possible, so that company will be away from the break-even point. Though they have declared 7 years, but the company expects that they want to achieve their BEP as early as possible. If they achieve 4 years, so as an investor, you will be happy or you will be upset with the company? What is your reaction if you are an investor of a Reliance company?
Happy.
You will be happy naturally, because the company declares 7 years, but company has achieved BEP within 4 years of time. So the rest of the period, you will have dividend. You will enjoy that benefit from company. So that way. So now, how to calculate break-even point? Now again, as we discussed in contribution as well as profit volume ratio, there were two methods to calculate these ratios. Similarly, for BEP also, BEP can be calculated in terms of quantity, which is known as break-even point in quantity, or this break-even can be calculated in terms of amount also, in terms of value. That is known as BES, break-even sales. There are two: break-even point, it is in terms of quantity, and break-even sales in terms of value. I repeat, what about BES? What it indicates? BES, break-even sales?
In terms of amount.
In terms of amount it indicates, and break-even point it indicates in terms of quantity.
Quantity.
Now, in examination, if you are asked to calculate BEP, that is in terms of quantity, so the formula is fixed cost divided by contribution per unit. Now, repeatedly contribution word is coming in our every formula. So you might have realized that how contribution is important in terms of marginal costing.
So if you are calculating in terms of quantity, the formula is fixed cost divided by contribution per unit. And in case if you are interested to know amount of break even, then the formula is fixed cost divided by PV ratio. Fixed cost divided by PV ratio. Now, how do we calculate PV ratio? Just now we discussed how to calculate PV ratio, profit volume ratio.
Contribution divided by sales into 100.
Yes, contribution divided by sales into 100. So that way we get PV ratio. Then same value here you have to use if you are interested to know break-even point in terms of amount. Fixed cost divided by PV ratio. And this way we get the value of break-even point. Now, after understanding break-even point, there is one more concept in marginal costing that is known as margin of safety, MOS. In short, it is known as MOS. M stand for margin of safety, margin of safety. Now, these are the sales beyond break-even point. Please remember, this is the sale beyond break-even point. A business will like to have high margin of safety because this is the amount of sale that generates profit. As such, the soundness of the business is indicated by the margin of safety. A high margin of safety indicates that the break-even point is much below the actual sale. And even if there is a reduction in sale, business will be still in profit. A low margin of safety by high fixed cost and high PV ratio indicates that efforts are required to be made for reducing the fixed cost. If there is a low margin of safety, it means a company's fixed cost have increased. So it is necessary to reduce a fixed cost of company. So that is the indication of margin of safety. If there is a low margin of safety, it means company is having high amount of fixed cost. So naturally, every manager will be informed to reduce the amount of fixed cost. So we would like to have a high amount of margin of safety here. Now, this margin of safety (MOS) may be expressed. The formula for margin of safety is sales minus break-even sales. Sales minus break-even sales. We get margin of safety. We might be given the value of sales. From there, we have to minus break-even sales. And how do we calculate break-even sales? Can you share me the formula? How do we calculate break-even sales?
Fixed cost divided by PV ratio.
Yes, fixed cost divided by PV ratio. We get break-even sales. So that value we have to utilize in this formula. That is sales minus break-even sales. So that we get margin of safety. So these are the 5 formula. Again, maybe tomorrow I will show you the slide and we will have numerical on this area. And which are those 5? Contribution, number 1. Number 2, profit volume ratio. Number 3, contribution, profit volume ratio. Then break-even point. And this number 4, margin of safety. Not 5, actually 4, because there are 2 sub-calculation in each area. But basically, these are the 4 areas where marginal costing numericals are asked. Contribution, then profit volume ratio, break-even point, and margin of safety. On these 4 numericals are expected. Now, right now, I may not be able to take a numerical because I am supposed to share screen with you, and because of this power issue, not able to share with you. But before we wind up today's session, whatever we discuss, if any query or doubt is there, you are free to ask me. And then after solving your query, we will close today's session. Yes, please. Anything you would like to ask?
No, sir.
Okay, then. If there is no query, we will close today's session, and then we will continue tomorrow numerical part on marginal costing. Thank you all.
Thank you, sir.
Thank you.